Curious what's up with the Denver housing market? I'll fill you in. Stay tuned. Hey everybody, it's Alyson Wahl with Live South Denver. Are you scoping out the Denver housing market because you're trying to find out if right now is a good time to sell or buy? Let's take a look at Q1 and then I'll wrap up with some thoughts and insights on Q2. I know, I'm brave. The Q1 headline would be that the year kicked off with a bang. Here's the numbers for January. Buyers closed on 7% more homes this January than they did in January 2019. 4,577 properties went under contract in the 7-county Denver metro area. The average days on market for January was 44 days. Now, average days on market, if you're unsure, it really means how long does it take for a home to go under contract. The median days on market for January was 25. That tells us that half the houses went under contract in fewer than 25 days, and half went under contract longer than 25 days. And we ended January with just about 40 days worth of homes to sell across Denver. Definitely a seller's market here as we kicked off 2019. So what did February look like? The buying did not slow down. And February was a very snowy month for us. Typically here in the Denver area, February is fairly pleasant. Not this February. It was actually dreary most of the month. It was one of our snowiest months ever. Didn't stop the buyers at all. Buyers put 4,689 homes under contract, and the average days on market dropped, both from last February and from the month before. An even bigger drop was seen in the median time to get under contract. You know, it was 25 days in January, it went all the way down to 11 days in February. And buyers were gobbling up homes off the market. We ended up with 35 days worth of inventory at the end of the month. Okay, so March, it's the month everyone really wants to get their hands on. March is when things really started to change here. The March data does look different, but I'm gonna sum it up right now and tell you March was a really strong month. Buyers closed on almost 2% more homes this March than they did in March of 2019. And there was a surge of new inventory. 6,200 new homes hit the market. That 8% increase over last March probably had a lot to do with the dynamics going on in the marketplace and around coronavirus. Now, 4,570 homes went under contract. That was fewer than February, and it was a 9.3% drop from March of 2019. I don't think that is terribly surprising. When I got this number, I actually was quite impressed with this. Showings across the 7-county Denver metro area dropped 60% in March. So people were not going into homes. They weren't even sending their agent in. So there was a major shift, and the people who weren't looking were the casual buyers. The motivated buyers are the ones who got us to over 4,500 under contracts in March. And then we've been talking about median days on market. This January number was 25, February was 11, in March it hit 6. When we see shifts like that, it is a sign of a hot market. So that's why I tell you the numbers in March were very different than January and February, but March was still on a roll. So the summary for Q1 is the market was hot. That's the most simple word. Hot, hot, hot. So what about Q2? Where are we headed? Here is a screenshot of the last 7 days of activity in the Denver market. This is the fastest and easiest way we have of watching trends unfold in the marketplace. What you see here is that more properties are both going under contract and closing than we have new listings hitting the market. So it's a major shift in this 1-week snapshot from what we saw in March, where we had a flood of new inventory. If we keep up in this pattern of less inventory hitting the market while more homes are going under contract and closing, we are going to stay in a very, very tight inventory market, which is a seller's market. And in sellers' markets, prices do not come down. I have buyers, lots of buyers, who keep asking me, can I wait for a price drop? What does the market look like? Do you expect I'll get a deal on that home? And what the data is showing us is that no, that is really not the trend that we're headed for. Now you will see on that graph, there were a substantial number of price drops that occurred in that last 7 days as well. Based on what I'm seeing in the Denver market, these price decreases are not coming from the desirable home in preferred areas. In fact, the homes that are priced well in a great neighborhood are still getting multiple offers. I know that might seem surprising, but there are plenty of motivated and qualified buyers out there whose job is secure and they are ready to go because rates for them are still very strong. The key challenges right now in the real estate marketplace are all lending based. We have lending challenges and then we have job challenges, and the job component plays right into lending. So let's expand on that a little bit. FHA loan credit scores have been lifted, raised up to a limit that pushes out a lot of FHA buyers. Where they would have qualified back in January or February, they don't qualify now. So that's one piece of the equation. On the other side, on the higher loan value side, we have high value loans and jumbo loans. Well, both of those loans we're seeing a lot of restrictions on. They are both considered riskier loans, just like FHA loans, and there are fewer loan buyers for them. In fact, the jumbo loans have almost virtually evaporated from the market because there are no buyers for them. If you don't know this piece already, if you've never purchased a home, when you get a mortgage, almost every lender that you work with sells that mortgage off shortly after you close. If there are no buyers for that mortgage, they don't know what to do. They are not in a position to hold that for you. And so they are raising interest rates to drive down demand, or in some cases just shutting off the loan program, which is the case of the jumbo loan. We're seeing a shift in lending availability at the low end with FHA, a shift at the high end with high value and jumbo loans. We're seeing a sweet spot right in the middle, and that is people who qualify for conventional loans. They have a lower debt to income ratio that's preferred right now. They have good credit, they have job security, and they are still able to qualify at the rates that are juicy, right? They're in the threes still. And those are able to buy and sell at will. The plus side to that sweet spot is that almost 80% of all homes sold in the market are between the $200,000 and $600,000 price range. The other thing we know though is that only about 55% of the homes on the market in Q1 were in the $200,000 to $600,000 price range. So there was not enough inventory, which drives up demand, which drives up prices. I don't see that changing much for Q2 either. As of today, the Denver market is proving itself to be strong. For those of you who are looking to buy and sell, you're really relying on the insights from your agent, what they're seeing in the market, boots on the ground, these snapshots we have of the last 7 days to understand where your real estate plans and the Denver market intersect. If you have any questions, I would be more than happy to talk to you. You just need to reach out to me however you see fit. You can call me, text me, email me. I will be happy to answer them and see how it is I can help you. I'll see you next week.